For me, liquidity is very much something that we shouldn't read too much into. Do you know what I mean? Like we need to be fucking aware of it, yes, very definitely. But it's that whole thing of getting trapped into thinking, you know, like over here, right? This is a great example. Oh, look, there's equal highs. This is going to get run. Well, no, it's not, because structure's saying it's not going to. So structure will always take precedent, right? But the way I sort of tend, or the way I try to view things, right, is like, I don't know, for want of a better phrase, like a liquidity profile, right? So we always know that in a trade, we need to have taken some form of liquidity, and we need some form of liquidity to target, right? That's the idea, right? So it's more, where is there more available liquidity rather than anything else, right? And if we just look at look at this, for example, right? We can see that structurally we're doing this, right? Structurally we're looking to do that, right? That's what makes sense from the higher time frame at that point in time, right? Then obviously we need to work on the SD levels, right? We know we come into an extreme over here, right? So this is like the last piece of the puzzle, essentially, right? I think I would guess that's the 4 hours, something like that. But yeah, like now this is the last piece of the puzzle, right? Now the question is, do we have liquidity to support this, right? Well, have we run liquidity? Yes, right? We've run, you know, these highs here, right? These highs here, right? Even these highs here, you know, we've run an absolute ton of liquidity to get to this point, right? So now where do we have more available liquidity? Well, we have more available liquidity, don't we? Right, and below the weak low, right? Because we know structurally this strong high should hold, right? We've run multiple levels, right? And I know there's you know, people are going to be saying, but here we could move up to this, we could do this. But this is why liquidity should be the last piece of the puzzle that you put into practice, right? And it's the same with anything, like with any trade, right? If you look here, right? If we go down and look at this on the lower time frame, right? Well, within like this structural leg, I mean, well, on one end, where would the structural leg be a bit different? What we've done, got a break of structure here. We break structure here, we break structure here, we break structure here, break structure over there, break there, break there, break there. So then this is our last 1M structural leg, right? So now within this leg, what happens? Well, again, we take out all of this liquidity here, right, which we build like previously to that. And it's important, this is why it's so important to like factor in looking at the build-ups throughout the day, right? Where are these liquidity pools building, and now how can we factor that into our trading, right? Because like if we're looking at this, right, does this look like a good area to trade from? Well, no, right? Because like structurally we're bearish, yes, blah, 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 blah. SD level, it's all right, it's not great. And then we've got the problem with the fact that we have no liquidity to take into this, right? And yes, we have liquidity to target, but likely what's going to happen now is that liquidity will get run, right? And this liquidity that was built up, and there was a great trade from this liquidity pool, right, moves up. Same as, you know, over, where was it? It happens all the time, right? You see equal lows built, and then you think, oh, I won't trade from that. Right, where was it? There was a great, this trade over here, right? You see this liquidity pool built down here, right? You see these like symmetrical equal lows built, right? But so here you're thinking, oh, I don't want to take this trade, right? Because these equal lows are going to get run. Oh, I don't want to take, you know, this continuation here because these equal lows are going to get run. Likely it's going to move down, run the liquidity, right? When it's not, because it's done its job there, right? And if you zoom out, you can see it much more clearly. Where was it? Over here, right? You can see that we've run all this, right, to target this, to then continue this move down. And it's why, like, here, is this a good area to trade from? Well, no, because we've got no pool of liquidity to take into the entry, right? Like, the only really good area to trade from here is like below these equal lows. So like here, really, right? There's something in there, right? And you can see that's why we get that little pop to run those equal highs there, right? But then structurally, the play continues, right? And it doesn't stop because we built these equal lows here and we run all of this. So we now need to target a point of liquidity. So price will just continue on down, right? And it happened like it's just all the time that shit happens, right? Like there was a trade I took that pretty much everyone told me I was fucking crazy for taking, but it worked very well, right? Because what I had noticed during this, right, is, you know, if we look at everything, right, there is an argument for suggesting lower prices from down here, right, from like this, right, suggesting that we'll take out all of this. But if you look at what happens during the day, like say here, right, say we get like a V-shaped recovery away from this, right, fine, we don't take the trade because, well, this is built equal highs, but say this hadn't built equal highs, right, because we don't generate liquidity here, right, that we can run after we've taken this, right? So we're going to get a reaction to that liquidity, right? Almost definitely we'll get like that's a large pool of liquidity below there, right? $2 trillion a day and whatever. Like there's an awful lot of money that goes through the market, right? So there's a lot of money sitting there, right? So we will get a reaction to that, right? The market will react to it in some form, right? But if you notice here, crucially, just before CPI, it builds these very recent equal highs, right? So now, where's the market likely to go? Well, again, we've got no pool of liquidity within it, right? There's nothing there. So what's it going to do? Well, it's going to run high, right? Because it needs to gather more liquidity for then a potential move down. But yeah, like there's other things at play here. So the market just keeps rallying, takes out these large pools of liquidity up here, right? But eventually respects the, what does it end up coming into? Coming into there, right? But eventually respects, right? And you can just see it every single time the market makes a really significant move, right? Look, like, there's another good example later on. Even here, you can see it generates liquidity, right? Here, under here, runs it, continues on up to take out the next pool of liquidity because we've got that structural play at work, right? Now here, right, structurally we're bullish, yes, right? But we have no pool of liquidity here. So we can still look at this because structurally it makes sense and we do build some form of liquidity here, right? But we may well run it like this, right? And continue on down to take out larger pools of liquidity like that they built under here to then continue the move up, but they're going to need to generate liquidity at the highs, right? Which if we watch, and even here, again, you see it, right? Takes out targets, right? Comes up, mitigates the extreme, right? We're structurally bearish at that point in time, right? The market generates a bunch of liquidity there, right? To continue to move down, right? Runs with that liquidity. Now, where are we going? Right. Well, structurally, we know that we're 4H bullish at this point in time. Right. So we're expecting a higher low to complete up to, you know, something in the daily range over here. Right. What do? We build a shit ton of liquidity under here. Right. And we build a shit ton of liquidity up here. So the market's going to react to this. Right. Give us a change of character. And then this is where we don't need to worry like so much about like all the liquidity profiles and shit, because we've already got that correct on the higher time frame, right? But yeah, we want to see the same stuff down here, right? and look again what the market does. Right, it generates this liquidity here. Right, it generates this liquidity here. It taps into, what does it tap into? This, yeah, something in here. Right, gives us a little change of character within here. Off it goes to target that liquidity. Right, but it's you see how it's building it, like why it should be the last piece of the puzzle, because this should all be when the trade's happening, right? Like when you're looking at the setup, are you building the correct sort of liquidity there, right? Like say we just have like, I don't know, one little demand range like this, right? And we just start dropping towards that. Is that a trade you should take? Well, potentially not, right? Because you've got no point of liquidity here, right? Likely it's going to take that out, use that as inducement for something there, right? And it's all about, like, I guess the thing is like, for me, what changed my view about it was understanding what liquidity, or what I perceive liquidity to be. Fuck knows whether I'm right. Again, I don't, know all of this shit, but it's all the logic that works in my head. And it's just orders, right? Like below here, we have a bunch of buy orders, right? Because what has happened, right? Well, people have tried to buy into, sorry, we've got a bunch of sell orders below here. So people have tried to buy into the market, right? So there's going to be stop losses. There's also going to be breakout traders, whatever. There's just a bunch of passive sell orders, basically, right? What happens when a sell order gets filled, when a buy order gets filled? If there's already been enough buy orders built up and there's enough resting buy orders in like these demand areas that we can see through these transactions to the left and these runs on liquidity over here, right? We can start saying that, okay, we have seen a large amount of buy orders filled below here, right? Because we run sell orders. Now, where is the market going to head to? Well, it's going to head towards the next pool of passive orders up here, right? And it's like, for me, that just changed the way I thought about it, right? It's still very important. Like it's probably why half the time like a trade that I take will lose, because I won't actually, I'll get too caught up in the fact that I think it's all not bollocks, but I think it's all way over egged, but it is still very important, right? So like here, there was a trade that all of us, or well, a bunch of us took on Friday morning, I believe. And it's hit, right? Still not a bad trade. You still get a trade out of it. That runs 1 to 10 to the high or something like that, right? But look, there's no pool of liquidity before the POI, right? What does the market do? Comes up, respects this, right? Yeah. And it, like a thing that we can tend to get a bit confused about is like, is it inducement? Is it a change of character? Is it this? Is it that? Which is still, yeah, it's a pain in the ass a lot of the time, because like, there's a great trade from, well, anytime you run a point of liquidity, you're going to change character in some sort of way, right? But there's a great trade up here, right? Where we do give a nice change of character from there. But this is the thing, right? You can, now what you can do, right? Like here, if we're looking at this purely from, like, we won't look at premium discount structure or anything like that. We look at this purely from a liquidity standpoint, right? Well, we can see we've got our last supply range here, right? So we come into this, right? We give a reaction. We know we've got a valid supply range here and a point of liquidity, right? So we can definitely short that in there, right? And we can then also look for a trade in here, right? Because we could be saying, okay, like this is the thing, right? Don't be scared to look for a hedge. It doesn't mean the hedge is going to be there, right? Like I don't think there is a hedge from this in this particular market, right? But what you can see is, cool, we've got some form of like last supply range here, right? It's actually really nice formed. It runs a bit of liquidity over here, right? Runs this previous high, drops down, builds another range here, right? And then drops down below this range and then runs up, right? So we can look at this in two ways, right? if we get an entry here, we can say, okay, well, the market might be doing this, right? Or the market may be doing this. Right, one or the other. If you look, if you find an entry in here, which I can't remember whether there even is one, reacts there, probably something on seconds, but look, you take a loss in here, right? You've taken a short over here, or I don't know, here, or some, there's plenty of shorts in this, right? You look for the hedge. If the hedge appears, great. If the hedge doesn't, don't worry. Yeah, like, because you've still had the correct build up of liquidity here, right? You've built these equal highs here, right? You've created these large equal lows yesterday, right? And the market should come down to a better demand level than this, really, right? This is like very high up the leg, right? Yeah, but we can still look, even like you could get long in here, right? In theory, you've got a run on equal lows here, you've got liquidity to target, you get in long here, take the hedge because it's correct from every standpoint, and then you're fine. You know, one trade wins, one trade loses, and yeah. Sorry, 2 seconds. Yeah, does that make sense to everyone? Yeah. Yeah, and it's just like trying to keep it simple like that, right? Because there's like, you know, it's like personally this sort of stuff, right? I won't look at whether like this candle's run liquidity, right? If this candle's correct, it's correct. We can just trade a reaction from it, right? Because we've got everything else in our favor, right? We build like here, we build equal lows here. You know, we've had a change of character up here, bounce off this, get a little change of character there below the inside bar there, right? So what's the reason for not taking this trade? Right, you don't have a bunch of liquidity above this high. It forms quite fast and aggressive. You have equal lows to target. You've run a large step equal lows. Supply and demand is correct. Structure is correct. Take trade. Right? Yeah, I mean, does anyone have any questions? Does anyone, you know, anything like that? I know Rishab has some really interesting stuff about like specifically around like Asia liquidity that we're sort of starting to take a bit more of an in-depth look at, but it looks, from what he showed me so far, it looks super interesting. So as soon as we've got some like really solid rules checklist, something like that around it, just so we're not giving you like sort of, oh well, potentially if it does this, like we can actually say, well, if it does this, this is what we can do. We'll get that all out to you. Yeah, fire away, dude. Where are you? Yeah, go on, you should be able to unmute yourself, man.
Hi, Sam. I have a question. So basically, I remember this price action over here. So I tried to take a short from this range.
Yeah.
The reason why, and I get stopped out, and I kind of give up on shorts and stuff. Yeah.
Yeah.
So,
yeah.
Is there anything wrong with that POI, or that's something that you would have taken as well?
In all honesty, in the moment, yeah, I probably would have taken that. Looking at it in hindsight, it doesn't really react to the demand that breaks the high, right? Which is where it should react. Like this reacts to something above the high over here.
Yeah.
So yeah, that would be that. This wouldn't really be like an SD flip. Do you know what I mean? So I'd be looking at that, thinking, cool, I'll trade a reaction from it, right? Like thinking this potentially, I don't know, you know, it's not thinking in the moment, so I don't know whether I would have taken the trade or not, but that is potentially one thing I would have thought is, okay, cool, I'll wait to see what it does on like the seconds over here. Go down. No. But yeah, I'd be thinking like, I'll wait to see what it does on the lower time frames when it gets to that point, right? Because it's just not going to work. Yeah, because it doesn't necessarily react. Also, it's got no inducement. There's a few things that you can say about that are like just like, let's trade a reaction from it rather than just stick a limit on it, right? Much better is like one of these two, well, specifically this DOI really, but it doesn't come to there. But then you get like another change of character within here. So, you know, you get another logo here, you get another logo here, you can short this, right? Because you're just following that supply range at that point, right? This gets respected. This gets respected. So you can short this basically.
Okay.
Right. And it's just that thing, mate. Like if you take a trade and it doesn't work out, like there are going to be times, right? There'll be times where you miss something. There'll be times where, you know, you get FOMO and you click the button when you shouldn't, all of that sort of stuff, right? But don't be afraid that, like, unless the analysis is shown as invalid, right, then you can still look for an entry. And it's just important to understand that there's those two different sides of trading, right? Analyzing and entering, right? They're different.
Mm-hmm.
Like an entry, we're trying to, like our analysis, we're trying to get in of playing the reaction. Yeah. Well, playing the reaction would be like on Friday. I actually did a video on this that I'll get uploaded. I think it's uploaded. I just need to do the link to it. Here, right? This is an example of playing a reaction, right? Okay, so if I'm looking here, I'm thinking, all right, well, this has broken some form of structure here, right? So this looks interesting, but we have this whole range thing here. If we go on 2M, it's very clean as well. And this, like, the thing is both of these levels react to like this whole larger thing over here, right? But we've got this here. So we basically have two, two supply levels there, right? So I'm going to be slightly more aggressive when we get into this one, right? I already took a break even shorting this here, but yeah, it's neither here nor there, right? But then it's just like, okay, well, let's see what the low time frames do here, right? And we can see the market comes in, right? Gives quite a significant little reaction to this demand range here, right? And again, it's just like, it's the whole thing again, right? Structurally, this is valid. We're looking at a lower high at this point in time, right? Supply and demand, yes, this level is very nice. It's very clean. And then liquidity, we build, well, we run this high over here. We also build these little equal highs here, right? Now, do we get a change of character? Yes. And then to be honest, I just like the way this formed, like how aggressively that formed. So it looked like I was watching it live, and the way it sort of popped and then just dropped straight away was someone stuck some money in there. And I just about stayed in this because it actually ran the high of it. But yeah, that's playing the reaction, right? We've got two levels that we're worried about. We trade like this one, we can be more aggressive with an entry. And this one, we can be slightly less aggressive with an entry. We can just wait for the market to show us a valid entry model again. Basically, it's just like when I say play the reaction, I just mean wait for another entry model, right? Yeah, that's it. That makes sense?
Yep.
Yeah.
Thanks.
No worries. Yeah. Could you go through the entry model again? There's a whole zoom on it, mate. But yeah, basically it's this, right? We want to see a liquidation, right? A mitigation of a valid POI, a change of character, and a flip, right? They don't have to be at the same time. This is what, there's a whole zoom about this, mate. But yeah. And then, yeah, the market comes back into here and drops off. right? That's yeah. There's a whole entry zoom about it, mate. No worries, someone else is awesome. But does that make sense about the entry model? Just to have a look at the two videos, mate. Yeah, I cover pretty much everything in it, I think. Is there anything that anyone struggled with from the entry zoom? Does it make sense to everyone? Yeah, cool. Okay, does anyone else have any more sort of questions about liquidity specifically? No. Short and sweet. I mean, it should be short and sweet. About POI. Yeah, what about POIs, mate? What is liquidity? Liquidity is me taking all of your fucking money, brother. Yeah, liquidity is Jeff. Liquidity is Jeff. How far can you chase price? Just like it's then about following higher time frame narrative, right? So, like, say here, right? This is a good example, right? The market comes in, right? Reacts here. If you're following this on the seconds, it probably respects every fucking range on the way down, so you can chase it all the way down, right? But you never trust the first high either. Oh, you want to know about? Sorry, let me explain this, and then I'll get back to never trust the first high. But yeah, so like you can chase, you can probably short this in here somewhere on the seconds, right? It looks like you create some form of supply range, the low is weak, blah, 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 but you need to get out at the low, right? Because you're not well positioned. I know, yeah, we choose, yeah. But yeah, does that make sense? Like then it all comes down to management, because like this trade here, even if that's the only trade you get a week, right? Still a good trade. One to, with a 1 pip stop, that's 1 to 8 to there, right? That's your month, whatever, done. But you need to understand how to manage it, because otherwise you get fucking, yeah. Otherwise you get fucked. Because you get in the trade, you get risk off, then you get taken out, break even, and then you're pissed off and you think, oh, I should have managed that differently, blah, 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 all of that shit. But yeah. Trade Thursday, Friday. Good. It's good. Thursday and Friday were fucking messy, to be honest. They weren't the nicest of days. I mean, but again, if we look at, I'm not paying 40 grand for a fucking cable. If we look at Thursday and Friday, right, they all make sense, right? Like here, the thing is, right, is we see this drop, right? This drop was pretty obvious anyway. Like I thought it was, run into this, tanks off, right? But then here we're all trying to trade the range, right? And yet there are opportunities in the range, right? But it's just understanding that what are we doing? This is what we do, right? And then again over here, right? We've got this whole larger thing here. Right, so what are we likely to do? Well, likely we're going to run the low and then we're going to get a pullback, right? And now whether this pullback, don't know at the moment. I would have thought if this was going to continue, it would have continued quicker than this, and this high formed quite nicely. So we'll see whether that takes the low on Monday or not. But yeah, because, well, no, well, we've broken structure there, so that would be our lower high. So the lower high has been taken out, but not closed above. So the low would in theory be weak. Yeah, so we've got arguments here for both sides, right? We've had a big run on liquidity and we are expecting pullback. We are in weekly demand. We have seen a liquidation and a mitigation and a V-shaped recovery. Might want to come back down to the extreme, take out all this, something like that. Yeah, there's levels to this shit. Yeah, it was a good week last week. I was pretty blown away when I added it all up, but yeah, it was just that drop, mate. But that drop, right? This is what I did that whole markup on, right? This is look at that PA. Like everything makes fucking sense there. Literally everything. Like all it does, right? And I got on the wrong side like early in the week because I was again, tied up in, oh, it should run these equal lows, right? We all do it, right? But look at what it's doing. We get a strong high form, right? What are we expecting? Another strong high form, right? The weak low to get taken out, right? We create a super fucking clean pullback. Like every lower high gets respected, every higher low gets respected. The only piece of M15 structure that gets disrespected, I think all week until we get down here, is this high here, right? And that's just run into the supply. Like it makes complete sense. But yeah, like at this point, right, you've got to, yeah, this is it though, Joe, right? At this point, you have to be aware of what is happening, right? Like here, structure is fully realigned. Like when I got in here, right, there was no chance I was partial in these until we broke this up. Not a chance. Because it's like, fuck it. Well, like, yeah, okay, we could bounce off something to the left under here and come up and, you know, I don't know, do some weird shit. But this low is going. Right, because we're fully realigned. Like all we're doing is impulsing, right? We've had a super fucking clean distribution, right? Like the way that high forms is like, as soon as I saw that, that's why I was happy to trade in Asia when I woke up, because I was like, oh, well, it's going to go down tomorrow. So, you know, I'll just get in here somewhere. Obi's woken me up. I might as well fucking get in a trade. Right? Like, but it's just so clean. Like as soon as this forms like this, right? Do not think that any of these are going above the supply levels, right? Because they're not, like not a fucking chance, right? Especially until we run these equal lows here, right? Then we can get, then we'll probably see some form of heavy reaction, which we saw. I think I said that on Monday. I was like, well, whenever it was Wednesday, I was like, we'll probably run this back up higher into this range and then drop off, right? Because you can just see how it's all forming. Right, like just try to think of it always in that sort of sense, right? Like, and down here, I said, don't start thinking this is going to go long until we break a high. Like, it's pointless. You know, we can react to fucking monthly demand. If the vested interest like are that strong, they don't have to react to it. Anything that we're trading off now is over a year ago, right? Yeah, there's still going to be interest there at those levels. Right, but we need to wait to see the relevance of those levels, because right now we have no idea. All right, does that make sense to everyone? Yep, make it 110% like that. Starting fresh, would you recommend creating case studies or forward testing? I would start with case studies, mate. Stuff like this, but this is specifically what I recommend to everyone, right, is taking each concept apart first by itself, right? Study structure first, right? So go in and like learn about how structure is formed, right? Like, why can we see this, right? Before, like, as soon as this has happened, why can we see this happening, right? And how can we capitalize on this when we get to these areas, because we get these structural realignments, right? That's the first piece of the puzzle. I would say do case studies on, personally, like I would build case studies around this. Well, no, for you, Joe, I don't know, mate. I think you're at a level now where you need to like start investigating a bit. Do you know what I mean? So maybe around like Asia, maybe around, you know, pick some like specific topics that you want to dig a little bit more into. Maybe just London session, because you predominantly trade London at the moment, right? So just do case studies on like how EU reacts to liquidity first thing London session, right? How it, like, you know, how often does it respect structure first thing London session? All of that sort of stuff. Like, can you, I don't know, can you get in on London as soon as you see fucking first 5-second chop in a direction? Can you, you know, random shit like that. But yeah. Yeah. Like, dig into the details now, mate, because you've got your edge. Do you know what I mean? Like, you're, well, after your fucking week last week, mate, you're fully confident in your edge, to say the least. So yeah. That's what I'd be doing now. Do I start trading during Frankfurt Open? To be honest, mate, I'll trade any time of the day if it's correct. It doesn't really bother me timing so much. I know some people are like, oh, you can only trade this, that, the other, but for me, it's like, is the PA there or not, because it reacts in a bunch of places. But here, you know, like, yeah, this markup, but this is what we should all be doing, right? Go and do this to this bit of price action. Go and do this to this bit of price action. Go and do this to this bit of price action. You know, all different time frames, everything, right? How does now 1M structure, not that we really view 1M structure, but how does this all work up in here? Do you know what I mean? Because you just see the same shit like all the time. I was looking at this and that previous, where was it? Right. So just wait, hold on, let's find it here. Where was that beautiful bit of order flow? It was over here. Right. Look at this price action on the 1M, right? And if you're thinking about this from a 15-minute, like 15-minute is now your 4H essentially, right? So that's your higher time frame structure, right? And look at the 1M structure in there. It's exactly the fucking same, like exactly the fucking same. Yeah, some people are wrong, mate, to be honest. Yeah, some days Frankfurt is a build-up, mate. No worries, brother. Yeah, some days it is a build-up, some days it's not a build-up, some days, you know, it's, yeah. What are you sending in the chat, mate? I really don't. Okay, what's that? Oh God, what have I done? But yeah, like, oh wait, hold on. Yeah, oh, perfect. Yeah. But yeah, it's like, yeah, mate, Pete, you're a perfect example of doing it down, of breaking it down. Do you know what I mean? Like, once you understand that shit, right? This time frame here is no different to this time frame here. Like, the PA is the fucking same, right? It's literally exactly the same. Right? We have a lower high that we can trade from. We see a structural realignment up here, hit it all the way down. Right, and the liquidity is all correct as well. Sorry, we've gone a bit off the topic of liquidity, but yeah, it's all that sort of stuff, right? And yeah, you need to look for inducements and things like this because they are important, right? It's half the time where, like, a trade I take won't work is because of the liquidity aspect of it, right? Because I don't pay enough attention to it, in all honesty. But you need to, you know, like here, right? This trade over here probably wouldn't work unless this previous high was built and taken out. Right, because the market wouldn't, if it had just come down and done this, it would need to take out the liquidity above this high. Right, so it's all important, but it's just knowing which order they should be put into the idea in, right? First of all, your structural idea needs to be correct. Then you need to have nice SD levels. Then you can build liquidity on top of that. Why is that 4H low weak? Because it fails to, it doesn't break swing structure, mate. So here we have 4H. If we look like 4H structure here is bearish once we take this, right? We see a lower high formed here. So we would always assume that the low is weak until we get shown otherwise, basically, until this high gets run, right? It's like down here, like this low initially forms quite aggressively, right? But this high has broken swing structure. So now this low is weak, we'll get run, right? Here again, right? This low forms quite well. We get a nice push away from it, London Open, right? But then the low fails to break swing structure, the low gets run again. Right? Now we could say that this low is potentially weak because we failed to break over here. So yeah, there's two arguments now because technically the high is weak because it's failed to create, and we had a change of character in that. We had like an internal change. Well, depending on whether this PA is correct or not, we've had a bit of an internal change in order flow there. So we could see that come back down into there and react off up. But yeah, guys, cool. Well, I hope that was helpful to everyone. I'll get this uploaded. I think that video is uploaded. I broke down the three trades I took in there thingy on Friday, like just after I did it, so it was all quite like fresh and shit. So yeah, but yeah, cool. All right, guys, peace and love. Have a fucking lovely Sunday, and I will catch you all next week, and yeah, we'll all go at it again. Yeah, take it easy, guys. Bye.